Welcome back to another video here with Invest for Tomorrow, and we're going to talk about ticker symbol ZOM, Zomedica Corp. And before we jump into this chart, I do want to say welcome to all the first-time viewers and investors. Welcome to the channel, Invest for Tomorrow. To all the subscribers, welcome back. And as we dive into this chart, I do want every single investor and viewer to be aware that we're going to touch base again on the S&P 500 index, how the treasury yield is doing, and we're going to touch base on the first time I talked about all of this, the short clip, so you guys could be aware of everything, how it's moving since then till now. And we're going to dive a little deeper, and I have a little bit to talk to you guys about the market, my perspective, and how we need to look at all of this as opportunity. So stay tuned for all of that. So ZOM, Zomedica Corp, ZOM stock has brought itself up, and it's actually showing some strength. Whether the market is going up or down, Zomedica is showing some strength right now, and that is definitely something to look forward to because we're in the month of March. March is a big month for Zomedica Corp. They have the Truforma medical device launching later this month, so anticipation could start, and hopefully it holds itself up unless the market drags it down with it. So we need to see how much strength ZOM stock has for itself, and it could continue to hold for itself. So I look forward to seeing how you guys feel about this. I want to see all the diamond hands down below. I want to see all the investors that are holding strong and believe in this one or loading up the boat. I look forward to seeing what type of conviction you have and what your perspective is on this one. And do you guys see this one probably reaching closer to $3 or passing $3? That's my question to all of you guys. I look forward to engaging in conversation with all of you down below, and also seeing you guys engage in conversation. I really enjoy seeing the community conversate, show their perspectives, and have, very honest opinions and integrity mentioned down below in the comments. I mean, it's just really nice to see the community involved and engaging, especially when we're all invested in the same stocks, right? So here we are with Zomedica, and the 50-day moving average is 181. If that gets broken through, this could be on its way down to newer lows. And the support level I would be watching is down here at 175. But before worrying about any of those numbers, the first support is 183. The fact that we're above the 50-day moving average, yes, we're in bullish territory, but we are in tug-of-war zone. If this breaks through 183 to 181, that's a very small window. The bears can gain control quickly. Then you'll have to watch 175, and I would still look at down here 169, even 170 to pay close attention to how the stock is reacting and how quickly is it moving to newer lows. But 183 is the first support to watch and see. Now, the highest point reached in the day is our resistance, and that's what the bulls need to break through, and that's 197. The bulls need to turn that into a support to reach newer highs and new resistance levels. So I do want every single investor and viewer to be aware of that. 197 needs to be broken through to continue this momentum and reach newer highs. Now, if this does get broken through, the next resistance level would be up here at 202. But before getting there, 197 needs to be turned into a support. As always, guys, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watch this video. Stay tuned till the end because we have a lot to cover, and if you learned something new, smash that like button for me to let me know you watch this video. So for everyone that has stayed to this point in the video, all I ask is for you guys to hang on tight for one more minute because I'm going to show a short clip of a previous video that I talked about when we started to see signs of this going downwards. I want us to pay close attention to these peaks, and the drawing might not be the same, but it's going in the same direction. Now we need to watch the market carefully, and I'm going to share with you guys after that short clip how I feel about this and what we need to look for, and also the 10-year treasury, how it's doing. Stay tuned, and all I ask for in return is for you to hit that like button to let me know you watch this video. 39.50, and it's been going down since. So one thing I want us to pay close attention to is if the market continues to build this behavior. This is the behavior that I'm seeing, right? If it continues this, and we're hitting newer lows, and it continues to hit these peaks, right? Then the market is struggling to hold itself up because the repurchase agreements of these dates do not exist right now. And a lot of people don't realize how much of an impact the Federal Reserve's decisions has on the overall market. Like, the only reason why the market's been pushing up higher, it's all the forward outlook and hope, but it's these dates. These dates hold up the market from going any lower or from staying stagnant. It keeps on pushing it. It keeps on creating anticipation, excitement, the speculation and the hope of seeing ticker symbols going up. So I didn't really want to make this video, and I didn't want to have to, but I need to make every single investor and viewer aware that we might be in the middle of a crash or correction already getting started. See that those are the peaks, and we've been going in a downward direction. The drawing is not meant to be exactly the same, but you could see we're going in that direction. Now, the other thing I want to mention is the treasury yield, right? The 10-year treasury. It's been spiking up. In the last month, it's gone up from 1.1 all the way to 1.6. And from last week, or if we put here the 5-day, you could see this was sitting at around 1.55. It jumped up to 1.59, hit 1.60, and now fell itself back down, and now it's sitting at 1.6. This at some point may not correlate anymore with the market, but for right now, it's definitely causing some type of surprise to the market. The market is actually feeling it and going downwards pretty quickly every time this goes higher. There will be a point where the detachment of the correlation will happen and the stock market will start to go back up on its own, hopefully sooner than later, because the treasury yield will actually become a norm to see itself at those levels. It's just that it's going up way too fast in such a short period of time. That's what's surprising the market. The other thing too is inflation year over year, which we need to keep in mind and pay close attention to, because the Federal Reserve is going to have a meeting next week on the 16th and 17th. So stay tuned for that. As always, guys, I hope you guys learned something new. I'm not here to encourage or discourage anyone from the market or encouraging them to buy, sell, or hold any positions. But I do want to say that this is the biggest opportunities because the beginning of a bull run is on the way down. And I'm going to share with you guys later on this week what I mean by that, so you guys could see what is it that I mean when the beginning of a bull run is when the stock market is going down. It's really hard to time the bottom, but this is the time to find stocks you like, you understand, and prepare yourself and position yourself based off of your due diligence and research to make a rational decision as an investor. As always, guys, once again, hope you guys learned something new. Share this with your friends and community. Thank you guys so much for watching, and let's make some money.